Raj, afternoon. Namrata joining in as well. I just want to go back to the story or the exclusive news that my colleague was reporting on, that POSCO is scaling back its operations in India. You know, POSCO is the largest FDI proposal we have right now. 51,000 crores was the proposed investment. Does this throw a terrible signal? Because at a time where FIs are cashing out left, right and center, the genuine need of the hour is to build foreign direct investment. And if names like POSCO make an exit out of India, things could get worse than just equity markets. It could be really economic corporate pain.
I think we need to look at it as two separate issues. One that has to do with the capital markets and the other that has to do with its more protracted land acquisition and other regulatory kind of issues. As far as the capital markets are concerned, what we are seeing is at least some perception that there's going to be demand destruction going forward. And in that, what is important to sort of distinguish between is if there's a shift in the demand curve, i.e. like structural changes afoot, or are you seeing people just holding back some of the investments in the uncertainty that currently exists. And I tend to go with the view that it is basically people just holding back their investments for the time being. And I don't think that we need to look at each sort of event as a signal in terms of the market. What we are finding in terms of valuations for Indian companies, especially in the BSE 100 space, the valuations are really attractive. And if you just step back from the trading perspective, which is in terms of a few days or a few weeks, the long-term valuations have already reached some historically low numbers, and I think they offer some really good opportunities right now.
Raj, can you talk a little bit about those opportunities that you see in this market? If you can talk stock-specific sectors that you like, or perhaps things you'd be comfortable basically buying.
Sure. So what we are recommending to our clients right now is to focus on building their core portfolio. So these would be stocks that one needs to have as much as 50 to 60% of their portfolio. And I'm talking more from a retail perspective here. And if you look at that, there are we have run the universe of BSE 500 stocks through a very sort of a demanding screen of 9 ratios, and with that we have sort of zeroed it down to just 10 stocks that retail investors can very safely buy into. Some of these companies that we would probably put on the top of that list would be companies like ITC or Grasim. We like BHEL as well. Now, these are companies that have very strong balance sheets. On the demand side, I don't see them, for instance, BHEL has a very strong order book. ITC tends to be a defensive sector to begin with. So there isn't much risk of a demand destruction that can happen with these companies right now. And if you have a investment horizon of 18 months or over, we see very little possibility of retail investors incurring much of a loss here.